Considerations before buying life insurance. Research policy options and company reviews. Before life insurance policies are a major expense and commitment, it is critical to do proper due diligence to make sure the company you choose has a solid track record and financial strength. Given that your hires and may not receive any death benefit for many decades into the future. Investopedia has evaluated scores of companies that offer all different types of insurance and rated the best in numerous categories. Life insurance can be a prudent financial tool to hide your bets and provide protection for your loved ones in case of death should you die while the policy is in force. However, there are situations in which it makes less sense, such as buying too much or insuring those whose income does not need to be replaced. So, it is important to consider the following. What expenses could not be met if you died? If your spouse has a high income and you don't have any children, maybe it is not warranted. It is still essential to consider the impact of your potential death on a spouse and consider how much financial support they would need to grieve you without worrying about returning to work before they are ready. However, if both spouses' income is necessary to maintain a desired lifestyle or meet financial commitments, then both spouses may need separate life insurance coverage. If you are buying a policy on another family member's life, it is important to ask, what are you trying to insure? Children and seniors really don't have any meaningful income to replace, but burial expenses may need to be covered in the event of their death. Beyond burial expenses, a parent may also want to protect their children's future insurability by purchasing a moderate sized policy when they are young. Doing so allows that parent to ensure that their children can financially protect their future family. Parents are only allowed to purchase life insurance for their children up to 25% of the enforced policies on their own lives. Could investing the money that would be paid in premiums for permanent insurance throughout a policy earn a better return over time? As a hedge against uncertainty, consistent savings and investing. For example, self-insuring might make more sense in some cases if a significant income does not need to be replaced or if policy investment returns on cash value or over conservative. A life insurance policy has two main components, a death benefit and a premium. Term life insurance has these two components, but permanent or whole life insurance policies also have a cash value component. Death benefit. The death benefit or face value is the amount of money the insurance company guarantees to the beneficiaries identified in the policy when the insured dies. The insured might be a parent and the beneficiaries might be their children, for example. This insured will choose the desired death benefit amount based on the beneficiary's estimate future needs. The insurance company will determine whether there is an insurable interest and if it is purposed insured qualifies for the coverage based on the company's underwriting requirement related to age, health, and many hazardous activities in which the proposed insured participates. Premiums. Premiums are the money the policyholder pays for insurance. The insurer must pay the death benefits when the insured dies if the policyholder pays the premiums as required, and premiums are determined in part by how likely it is that the insurer will have to pay the policy's death benefit based on the insured life expectancy. Factors that influence life expectancy include the insured age, gender, medical history, occupational hazards, and high risk hobbies. Part of the premium also goes toward the insurance company's operating expenses. Premiums are higher on policies with larger death benefits, individuals who are at high risk, and permanent policies that accumulate cash value.